All right, Laura, it looks like it's just you and I then. So I am recording this. Oh, this kind of spoils things. I was hoping that there would be more. Hey, how you
What's
doing?
up, Mike? It's Lar. Yeah, it's Lar.
I was hoping there would be more folks on here because this is the point when it's going to get confusing, and this is the point where it's going to get a little bit more in depth. Um, and I realized this as I was reviewing the video that I recorded. I realized that it was going to be a bit of a challenge. Um, my plan was to just extend this and have it run longer, and do both what I had recorded and answer questions that have popped up already, and address them all in the same capacity, so that we would hopefully leave this with less questions. But I got to think for a second. Um, we'll still do that. I don't know that I'll probably re-record. And Laura, I'm going to use you as well, not a scapegoat, but a guinea pig here. I'll probably re-record the
Sure.
video that I already have recorded based off of what questions you have, because um, you've got a good grasp on this stuff already. So if you have questions, then I'm sure other folks have questions. So I'm going to
Right.
use you as a bit of a guinea pig. And if Mac joins, same with him. He's on here, but I still don't see his audio. So um, with that, uh, before we get started, do you have any questions about what we've gone over so far? And there's Mac. Now I see his audio. But do you have
Um,
any questions about what we've gone over so far? Just, using fibs as in their traditional sense in terms of just proper retracements, or using them combined to find take profits, targeting, bigger move retracements.
right. I've been working a lot on it and doing like back testing and stuff like that. I My biggest thing, honestly, is after I draw my support resistance and all my trend lines and all that stuff like that, is figuring out the best place to enter. And I get it, on the negative 23.6, or on your finishes, and at the peaks of your trend lines. I'm finding myself getting into trades too early or too late a lot of the time.
Okay. And are you still sticking with spot forex for the most part?
Yes, yes,
Okay.
yes,
And
yes.
you're still doing the higher time frame stuff where it's more swing
Absolutely.
trading. Okay.
Yes, sir. Yep.
So then I think that this is going to help you a lot. I think that this discussion we're about to have around starting to leverage profit targets. And I think that what you'll find is that when you have larger scale moves like this, let's switch off into the daily. And so here would be like the overall swing. And we've got this, excuse me, actually, let's take sorry, that I didn't put that at the right place. So let's take this 61.8 as an example. And, oh, now that jumped too. And in the broader sense of swing trading, we're looking to target this as a retracement. We're not necessarily looking to target it as a short entry, but we figured that we've broken past this structure right here. We seem to have found a bottom, and we're starting to drift in the right direction. Well, so that the 50 and the 61.8, those are both prime targets. Those are both um,
Right.
from a swing trading perspective, those are both good distance moves that you can anticipate the market at least reacting towards before you start to see any strong bullish momentum coming out of there. Bearish
Okay.
momentum, excuse me. And just to give ourselves a bit more of conviction that we did find a bottom. There's a fairly strong level, and if we were to go to like the weekly, this might actually form a little bit of a wick off of a retracement. So this bounce out of here, right? This initial bounce and then coming back up, retesting and breaking through, that's not a fluke. And so now from a swing trade perspective, this zone becomes a little bit more realistic and a little bit more attainable. Just because we've reacted strongly out of a significant level. And just for giggles, let's go down to the week and see what it looks like. It's just one long wick that goes past it off of a long wick here. So it just gives you that conviction that it's moving in the bullish direction, at least for the short term. So what that gives us the ability to do is now instead of kind of guessing and just really wondering what the best entry position would be, now you give yourself a little bit more of a calculated scenario where you're just sitting and waiting. So we break above this level. Next thing to look for, and actually that's not a good example because that would be a better example because that happened in the future. So let's say that we're coming out of this zone. We finally break back above here. What I'd want to see after we break above this level here, at least on the 4 hour, is a clean break above this structure here, and then some form of a retracement back down and see where it holds. So you're giving yourself strong long-term structure and strong short-term structure. There's no real structure here. This is just on the weekly, as you saw, this is a nice wick down and then a quick reaction. Really in reaction to this price level here. But now that we've broken above here, we can start to look for bullish trend, and we can start to look for a little bit of a bullish scenario where we find our anchor, we find our establishment point, and then we can start to do something like this. So this channel won't have formed yet, and instead what we're left with is anticipating, grab the top of that, anticipating something like that. So we're now focused around this trend right here. And let's find our next entry points. Okay, so now what you can do is you could start to look for just simple reactions. So you get your strong move up, clearing this structure, clearing this second structure here, and now we get the bulls that carry it through. We find a new low point. Again, this is right in the middle. So I think the hard part is distinguishing what makes a really a confluential entry, something that has everything, something that truly lines up. And what you're left with is looking for little roadmaps, little pieces of the puzzle that structure's leaving you. So we come up, no entry here. This is just a good bullish sign. Come up and clear this little bit of structure. Actually, it was this little bit of structure here. Again, no real entry because there's all you have is just support and resistance. But now you get to the point where you're able to start to pinpoint impulse moves and start to pinpoint where that true volume was. So you look to where the last little bearish fallout was, retesting some levels that we were looking for it to break. You start to pair your fibs with that. Now you get a little impulse run based off of that structure break. And now not this entry, but maybe this entry becomes a little bit more realistic and a little bit more, or even this entry, because we plotted this little mini structure out. I'm just gonna make that not as abrasive because it's not as strong as I would like. But now this zone becomes an area of interest for a long entry. And let's say that you miss it. There's, that's okay. There's nothing wrong with it. Now you can take your swing, right? So now that we've cleared this structure and we've reacted off of, this short-term little impulse fib move here, and you can see that it kept the structure to establish that little trend or that channel upper there, because this wouldn't have been here up until we've completed that profit target. Now you've got a little bit more to look forward to in terms of a retracement. So if if we plot out that little bit of support there, we know that we filled fib structure here. Now, if you want to look for the swing itself, right, this overall move, because this wasn't, in the grand scheme of what actually happened, this wasn't a massive amount of bears that stepped in. So we could just swing from high to low, or from low to high. Came out strong, cleared structure, found impulse Fibonacci completions, which if you didn't get in on any of this, it's all just relevance to finding your entry here.
Yeah, on the
Right
50%.
around 50%, we've got good structure. We've got structure that cleared and held. You've got, and I think the most important thing in terms of spot entries and swing trading is you've now got good structure in terms of where your stop loss should be. So now you've got a very measured and pre-calculated exit that sits, it sits above that 61.8. You could drop it down lower if you're willing to take the risk, but we've now got, again, this wouldn't be here just yet, but we've now got that level of support that really held twice as a strong, you could have conservatively waited for a fill down here, but you wouldn't have gotten it. But that would have been, a good level of protection to give you the confidence to enter and to, if you look at what your risk to reward is, if you just look in terms of completing this channel again, then that risk to reward right there is fantastic. And if you look in terms of completing to the negative 23.6, that's even better risk to reward. And you could have capitalized. And I went on a little bit of a long-winded answer here, but what I was going to get at, what I was hoping to get at was, now you've got your low point, right? And now that you've got your anchor and your establishment point, now you can start to formulate a bit of bidirectional trading. So maybe you don't take a short here because really all you have is just that channel fill, that upper trend line fill. But instead, you start looking for where you can add to your position, because if you're you saw how the impulse fib structure held, and you're seeing how the swing fib structure held. So that should give you confidence that this fib structure is going to hold. Now that gives you opportunity to look for, where the last little point that it dipped, or it took off coming out of this structure, and find another entry. And so if you look here, right, you've got another little zone that provides good entry based off of that channel forming. You've got your 50%, it's right smack dab in the middle of your 50 and your 61.8. So again, you've got your trend line low, nice little spike back. And if you were to go to the daily chart, I'm sure that would look great in terms of where the wicks were. Held really nice. You see none of the bodies closed below that 50% retracement right there.
Right.
And so you add another long position in anticipation of targeting that negative 23.6, which we eventually fill. And then you can even see we come dip back down again, test that same fib structure, and then fill the other negative 23.6. Now you can see it follows pretty closely along to the other two fib completions there, that negative 61.8 on both ends of the spectrum.
Right. Well, that makes it a little bit more clear for me. I see what you're saying. I can visualize. I just need to really go back and back test it and look at it and really, let it sink in. Like on that one, on the 4 hour, when we had the swing move and it retraced right to the tick to the 50%. You consider that stronger than if it front ran it a little bit, or passed it a little bit? If it hits it to the tick, do you consider that being stronger than the other two ways?
Not necessarily.
It really doesn't matter.
No, it's because it depends on, honestly, quite a bit of it depends on where folks are trailing their stops, like where it's very, very seldom exact. That's a unique scenario where it was like right here, that 50 was dead
Yeah.
on perfect, and that's a rarity. Excuse me. It's you honestly find that more in terms of like if you look at the hourly structure,
Hmm.
you'll find that more in terms of like hourly movement because that's where scalpers are. So you can see that it filled that 78.6 off that
Right.
short term move pretty perfectly, and then it filled
Hmm.
down to the negative 23.6 and moved past it a little bit. Um, so scalpers are a bit more precise in that sense because they're trading with smaller stop losses and they're not trailing their stops. But
Yeah.
when you get to swing trading and you get to higher time frame movements, um, it's a rarity that you'll see a hit like that dead on. And really, what you look for is just more of the overall fib structure holding. Like what gives it more validity to me is um, breaking through here, having that impulse run up, and having the actually don't know if that's where we did it. I think it might have been, but
Yeah. Yeah. I think it was right around there. It was at the
but
bottom of the red
you
candle there.
fill those profit targets. You fill the negative 61.8 perfect. That's a bit more telling to me.
Mhm.
Is you take where the volume is and where the important structure broke, and then you start to fill profit targets perfectly. That's where it starts to get interesting for me, and that's where it starts to validate for me. You're just building that story. You're building a story of trend and calculated moves. So
Yeah. That makes sense. That makes a lot of sense. All right, good deal. That was my major question. That was the one I was really stuck with. And I see where you're saying, breaking that level down here and then taking the fib off the pretty much the retracement there, and then running your impulse move. That makes sense too. I like that. That
what
definitely.
So you said you've been doing a lot of back testing and you've been trying to find or and that was a question you came out of it with. If you don't mind, what was do you have an example of a chart that we could look at kind of as a group?
Um, Let me see.
And you don't have to you
See,
don't have to post anything like what you've had
no, no,
published.
no, no, no. I don't have a problem with it. I'm just trying to figure out which. See, I bought that soft forex simulator, and I use that for my back testing. You ever seen that? You know what I'm talking
No.
about?
No, I've never heard of it.
It's it's absolutely awesome. You can actually go back and it's almost like the uh, Thinkorswim actually trade on it, and it's just stuff in the past. You can go back a year and you can take trades, and it's just great. I love it.
Hmm.
But it's helped me a ton. It's called Soft 4FX, and it's a great simulator. But I'm just using it on that. I didn't do anything live to really mark up a live chart, but I was just going back, and you can back test basically any pair you want on there.
Okay.
But
That was good.
uh, yeah, let me see. What is this one here? I was looking at your what is this? Actually, it was one of the charts you had posted on uh, the market markup,
Hmm.
and it was the USD CHF, and I was on there taking
Actually, I think
a
that's what we're
mo
at.
trade.
Yeah, that's the chart we're on right now.
Is that what we're on right now?
Yeah, did I
Oh, it is. Yeah,
see? Hmm. I don't
yeah.
remember. What time frame was it on?
4 hour.
Oh, that's
I
probably.
just took one off. Yeah, I took one off the 4 hour. Um, what I was doing is I'm trying to remember how I went about this. I didn't because I cleared my charts off, and I'm trying to remember to get it back to where I was. I think it was I took the fib off the. I don't know if you can see you probably can't see my chart, but here toward the end, off the previous higher low, I fibbed to the top, brought it down, it came to 61.8, and then took off and up to my completion. And I took a short there, pretty much next one over, Mike. Oh yeah, that one right there.
Okay. And then it filled
That
right
one right
here.
there. right, yep. And I took a short, but I got in late like an idiot, and it was probably about halfway on that big bear candle there, thinking I could ride it down. Now it's coming back up on me.
Okay. Let's
And
see.
my stop loss is right above the high.
Okay, so it's
And I
like
put
right
my
at, it's pretty much 9,700.
right there.
Okay.
Absolutely, yeah, right there.
Okay.
Yeah, it's 9,701 is what it is. Yeah.
And what's your position at? You said it was about halfway.
Yeah. Yeah, it's my actual price is 96659. That's where I got in.
Okay, let's see. Okay, so it was
Yeah, I got
more
in
down
late.
towards the low. Okay.
I know what I did in my head. I jumped in. I got rushed. I didn't flip through my charts, and I saw it, and I was like, let me get in here. And it's a demo, so but still, I hate making stupid mistakes
Okay. Well,
when I
no,
know
this
better.
is good though. This is good. This is it's for, right? This is what these sessions are really for, is to start to dive through, talk about some of this stuff. So let's see if we can't. Oh, that snapped. I mean, that negative 23.6, that fill was beautiful. That's about as picturesque as it gets.
I know, and I was a little late on it.
But you know
I
what? But
saw that, and I was
that's
like, damn.
okay. That's really okay. Let's see. Let's just build. We'll build a shorter term story around it. Um, so you've taken the structure course, right?
Yes, yes,
Okay. So have the high to high and low to low stuff?
yes.
I'm assuming. So that to me right there, that's pretty nice. That's a huge sell off that's out of nowhere, and it's like that's the last sell off before a significant level is broken. So that's a heavy trending upwards, right? We're st Yeah, that's a tough one. I mean, we're still trending upwards. So really, for me, I would have paired, and we won't get too far into that. Let's see. Will this be a negative, or will this be a 38.2? Yeah. So we're in a heavy trending market. I honestly, I mean, I think it was just the execution, and I think you know that, but
Oh
the
yeah,
the trade itself, I don't mind at all. That's a perfect entry. That would be an
that's what
ideal
I've.
entry. That would be an ideal exit right there, because you're retesting strong structure that was finally broken. So that's just one thing to keep in mind is yes, we're in the middle of a uh, strong channel, right? It's just been money for the better part of 2.5 months. Um,
Right.
so there's absolutely reason to believe that it'll fall out of there. But if you're going back to where we started, right, with that overall impulse or that overall swing move, and the target of that negative 61.8, right? We already blew clear through the 50% retracement.
Mm.
So if you're keeping that negative or that 50%, the 61.8 in mind, we're almost there, and it becomes a bit of a challenge when you try and prematurely short. Oh, jeez, I thought that was my dog for a second. Sorry, my windows are open. I thought my dog was. Oh, it sounded like he was in pain. Um, yeah, so if you're getting that close to a bearish retracement and you're if you're filling that negative 23.6, I absolutely see reason to short that negative 23.6. But I would just be super careful with where you're trying to take it to. So for me, again, I think your idea and your analysis was spot on. But if it gets to the point where you've missed it like that, I would. That's one where I'd stay out, and honestly, I'd even look to add to a long position there, just because of what you're retesting. Significant structure, and coming out of you're getting that close to really strong Fibonacci levels to aid in your um, your entry. And if we even look, where's the 78.6? Is it up around the negative 61.8 completion?
I've actually got my stop, or I've got my take profit. One of my take profits at the 50% there at 96.395.
Oh, for a long position?
Yeah. Oh no, for short position coming down. I want to see if that's that's what I'm saying. I got in short. I've got like my stop losses, way up there, above where we talked about. But to take my take profit, I put it at the 50%, thinking it was going to come down, at least get to that traffic right there at the 50%. But I don't know that it's going to come back down.
Yeah, it's
But we had the channel there. I figured I had a lot of things going. I thought, but
yeah,
like I said, I
I mean,
rushed it. I took a rush trade, is what I did, and I still was stupid.
it's not. I mean, it's not a bad trade. And really, if the entry was better, and this is not to to speak down towards the way
No, no,
that
no,
this
please.
worked, but if the entry was better, this would be really an ideal trade management scenario. If the entry was better, and you entered close to the fill here,
Right.
right at that negative
That's what I need to see.
23.6, and you had your stop originally up past that 50% retracement, that would be a perfect short entry anywhere in these top two wicks. And then once you break down, let's use this as an example on the hourly, right? Then
Right.
once you break down past here, if we look at what the hourly looks like, once you break down past this short-term resistance right here, there's short-term support right here, then that's a pretty great opportunity to trail your stop pretty much, a little bit past break
Sure.
even. And if that's the case, then when you're looking at this right now, you're starting to reanalyze. You're starting to reanalyze because you're in profit. You're not worried about getting anything back,
Right.
or giving anything back. If your overall goal was that 50% retracement, which I'm not. I mean, I'm not convinced it won't fill back down there. But so let's change that to our profit target. Um, Now you're looking at an entirely different scenario. Now you're looking at, well, it's sitting at a 78.6 retracement right now. Um,
Hmm.
now you pull your stop tighter so that if it fills just past the 78% of this retracement, then you're still walking out with, let's say you got in at 96.99 down to 96. So you're still walking out with 10 pips. That's
Yeah. So
not bad at all. But and the dollar Swiss moved rather slow too. So 10 pips off, and what's this? 96.49. So even filling down to here, I mean, I don't see any. That then it becomes an entirely different ballgame. Now once you break down below this level again, if you break down below this level again, well, that's your new best friend.
oh,
That's
absolutely.
your stop loss is dragged here, and now look
Sure.
at where that negative 23.6 sits.
Exactly.
It's right where you want that 50%. So I don't think that all hope is lost in terms of that trade. I think that that's a perfect example of where the execution makes a big difference.
Yep. That's right. That's what I said. That's my problem. I gotta be patient. And I get hurried sometimes, and I know every time I do that, it's a bad move. So I gotta figure out how to slow myself down.
Yeah, and honestly, if you miss the trade, you miss the trade. There's nothing wrong with
Exactly.
that. And if that's the case, then there's always, there's always another way to look at it, right? So if you still hold the same bias, well now, I mean, you just saw when you map this out, that's a 38.2 retracement that's,
Hmm.
dead on perfect on a heavy trending bullish market, right at some short-term support. So, if you still have that, if you still have that bearish bias, watch for a bounce off of here, and maybe take some out of it. If you get
Sure.
the bullish move out of it, then take it up to the 50%, take it up to the 61.8, right, with all that structure, and then start to look for a short entry. I mean, looking at this, the short entry would have been at the 60% retracement with a stop above the 78.6 up here,
Right.
on a retrace, but that's at least better than having a short entry down here,
Right.
right? And now if you entered at the 60, so 96.79, it's now at, so now you're only what, like 7 pips in the negative. So with a half lot, now you're only $35 in the negative. With a 10-cent lot, now you're only $7. So
Right.
it's not as, it doesn't seem as bad, but again, I mean, the analysis was perfect. I don't think there's any, and this is where this is kind of it, this discussion is really facilitating what I wanted to talk about tonight. I mean,
Sure. Sure.
I had the dollar Swiss pulled up,
Yep.
to start anyways, because I wanted to talk about this channel, profit taking, and for me, when it comes to the negative 23.6 and the negative 61.8 profit taking targets, um, if you don't have a lot else around it, like if you don't have a retracement, a trend line, some decent supply, or a strong support or resistance level, then treat it as treat it in your mind as, the area where a lot of people are going to take off money and
Right.
positions, and plan for a short term burst out of that level. And then if you break back into structure and break below structure, then you can start to reassess and re-enter. But for me, like for this right here, this really helps to illustrate exactly what it is, I'm talking about, where you look at a perfect short entry and a perfect exit, and then look to capitalize back again, or then you look to reassess to see, well, if we were to, come out of here strong, test this level, and then come back up and retest here, well, now that's
Hmm.
another great short opportunity to ride that channel fill off of the negative 23.6. But yeah, it's tough. It's tough with the extensions lining up perfectly like that, because
Yeah. Yeah. Yeah.
they make it seem like, it just makes it seem like such a long-term opportunity. Um,
I figured it was going to be like the last time and just really tank, right down to the bottom. I was really shooting for the moon, really.
and you know what? That's not a bad thing, right? Because if you think about what we talked about a little bit ago, right? It's it's primarily, the reason that it's not is primarily because you're getting to the point where you're getting to the point where you're right at that strong 61.8 magnet, right? It's
Hmm.
it's it's a retracement. There are a lot of pending orders right there. That's I probably where a lot of take profits are, but even more so, that's where a lot of short positions are. Um,
Right.
and if we can drift up there, right? So what we may see is, kind of a short term, like another little pop down here, and then just ride this trend line up to it, and then
Hmm.
hit it somewhere right around there, where we can hit it, cross back under, and hit it, and then tank.
Hmm.
Just because there's a lot of structure happening right there. But if you look here, right, um, I would have what we had in terms of the rest of this run up, and what we started the webinar with was strong Fibonacci completions and Fib runs, right? That impulse run to completion was perfect. And then coming out of it, the higher time frame fill was perfect. So there was a lot of Fib structure that established itself. If you look here, what you get out of this run is most likely, did we get a 23.6 out of it? We tagged the
Yeah.
23.6, but what that signifies to me is just a heavy trending market and one that
Sure.
is just, it's still very bullish until we can fill to some of the lower retracements.
Okay.
So
No, I get it. Yeah.
it's tough. It's tough. But I don't think you did anything wrong other than just entering too late, and you knew that.
Oh, I learned a lesson. Every time you lose when you learn a lesson, so that's good.
But the good news is, oh wait, no, I think never mind. I was gonna say the good news is that you're long and you've got that other position up there, but then I realized that you told me it was
Yeah,
the
yeah,
bearish
I'm sure.
50% retracement that you were
Yeah,
thinking.
yeah, 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 yeah,
But
yeah.
no, there's nothing wrong with it. Actually, the analysis is great. That was a really, that was a really good catch, especially given that we haven't talked about completions yet. But that was, no, that was good. Good discussion, and that's what these webinars are for, which is why I was trying to
Sure,
get
absolutely.
more people on here.
I know it. I know it.
Let's see, Matt, let's give
Yeah.
you a chance. You got anything you want to talk about? You got any questions for prior content?
No, not really questions. I enjoy watching videos. It's more of just frustration on my part for poor planning. I think it feels like when I plan, like I actually get to like let the trades come to me, but with my job and whatnot, I seem to try to get the learning in, and then I'll come in and I'll try to rush trades and I end up losing. But then when I plan it out or whatever, I end up doing everything correctly on Spot Forex and 8X and everything demo, and I'll win and I'll feel confident. Then I'll go live and I'll lose, and I'm like, man, this sucks. Man, it's just I go back and I'm like, man, I don't know if I'm what's really going on, but I'm staying at it and continuing to learn and doing the best I can.
So let me ask you something. How long have you proven to yourself that that you can make consistent profits in demo before switching over to live?
Exactly. And that's the thing I know because I don't go live often. I'll and I need to measure. That's one of the things I want to ask you too. How do you measure like the amount of wins or win percentage that you should have? Like, okay, now I'm ready, because I will look and I'll keep checking and I'm like, okay, I'm winning. Okay, I see where I lost there. I'm like, all right, but then I'll go live and it's a whole different type of ball game, like emotionally and everything. Not saying I'm overdoing it as far as like the risk or anything, but I don't know. It's just frustrating.
I would honestly say there's no real measurement that you can give yourself in terms of like consistently like what win percentage, because your win percentage is going to change uh, week over week. What I can say is that measure account growth, but with consistent position sizing. So you're not trying to martingale it out. You're not trying to just trying to beat the system with with compounding quickly, but um, start to start to keep track of account growth with consistent position sizing, and whether that's Nadex and uh, you're trading like 4 or 5 contracts on Nadex at a time, you just keep that for like 2 months straight. Um,
Mm.
that's when it starts to become robotic, because you get used to the P&L movement, you get used to what your drawdown is going to look like and what your risk is going to look like, and in terms of going live, a lot of people go live too quickly because it's the allure of making money, but they don't ever factor in losing money. And so what I recommended to somebody that was having a very similar situation, he was trying to turn over to go live much too quickly, and he was just doing it, he was doing it consistently. Um, there's got to be some stake in the game for demo. Uh, you got to be trading for something for demo, because when you're trading for real money, emotions are there. So what I recommended to him was to set aside like a separate account. And one thing I preach is never trade with money you can't afford to lose. So
Yeah.
figure out what you can give yourself and pay yourself every other week, every week, whatever, and give yourself and reward yourself an account that you're going to fund your live account with based off of hitting certain account growth or being positive for the week in demo. So if you're not positive, and if you're treating it like, if you give yourself certain monetary goals in demo that you're then going to fund a live account with, and the money's real, like in some capacity, then you're more apt to treat it as a consistency business, and something that actually has a foreseeable goal at the end, and it's not just empty practice. And so I would recommend measuring it on account growth. And let's say that if you and just keep a spreadsheet, right? Don't If you're trading in Nadex and you're trading with a $25,000 account that they give you, it's tough to really measure what true account growth is. So keep it on your keep an Excel spreadsheet where you give yourself a starting balance of like $1,000, and you're trading within risk for that. So you're trading like 2 to 3 contracts, and let's say that in order to reward yourself at the end of the week and pay yourself $50 to your live account funds, then you need to see um, a growth of 50, or that's a bit aggressive. Let's say like a 20% account growth to $1,200 for the week.
Mm,
And if you hit that, then you pay yourself. If you don't hit that, then you don't pay yourself.
I like that.
And
That
then
wow.
when you've built it, like, and then you can give yourself the goal, the higher time frame goal of, when I've paid myself $1,000, that's when I know I'm ready to go live, because I've been consistent for that long.
That is that is terrific. I really like that.
Yeah, that's a good idea for sure. But even, I find, especially when I've been trading for 5 years now, and, I demoed, I swear I demoed probably, I'm still demo, but consistently demoed for over 2 years. And it, he's right. You gotta feel comfortable. But it's even when you're winning in demo, and you're consistent, you're real consistent. The minute you place that first live trade, pretty much all that stuff goes right out the window. It's a whole different story.
That's real.
It is, but
Absolutely. And Mike, the thing that really helps me, I love watching you, like when you create like the plans, because it's one thing to watch you do the areas that are already complete, but like planning for upcoming. Not, I'm like actually not taking the trades or anything like that. I just like to see, like, okay, like I believe you called it like the bilateral, like, okay, here's if it go up, here if it goes down, like having that plan. And I did that, and I'm like, this is incredible. And I love when you do that, because it encompasses all the tools that we're doing. Because I'm not saying like, okay, I understand everything, every tool fully or anything like that, but I'm like, okay, I've taken the course and everything and the training. I'm like, all right, I get it. Well, let's put this thing together. I like how I'm at with it. I don't know if Laura or anybody else is like that, but it really makes it come to life for me then.
No, that's good. And I get it, and I love to do that. Sorry, my wife's. I just got distracted. My wife's she's in a grad class right now, and she's got 3 weeks left, and 3 weeks left in the class. She just texted me saying they're doing the final exam tonight. Um,
Oh,
Oh,
um,
wow.
yeah.
oh man.
Yeah,
More
so
power to her.
what's that?
More power to her.
Yeah,
Yeah.
no doubt.
So what I want, and it's tough because we're in this little position, we're in this little flux position right now where you know enough to be dangerous, and
Hmm.
you're starting to get comfortable to the point where I catch myself um, I catch myself talking about things that we haven't talked about. So if I'm doing those live plans, I'll get carried away and
Right,
start
right,
to
right.
incorporate things that we haven't talked about in the boot camp yet, and not everybody knows about. So
Hmm.
it's hard for me to wrangle myself because I mean, I'm very passionate about trading, and when I get going, I don't shut up. And
No.
it's good, but it's good to a fault. And so what I want and what
I
I've
don't think
been
so.
hoping.
Not to cut you off. I hate to cut you off, but I really don't think so. That's like detrimental because you're giving people a glimpse of the future. I can understand what you're talking about. Like it'll be above our heads, but I like looking at like, okay, that's what level he's on. Like I need to get there. Let me keep watching that and see what he just did there. That way, when he does introduce it, I'll have an idea of what he's talking about a little bit better, in my opinion.
Yeah, that's honestly though, that's why in this exact reason, this is why I was very hopeful that we would have more involvement in terms of folks doing recordings. That's why when we started the boot camp and when everybody expressed their interest, I mentioned to everybody that it was going to be that it was going to be work, and it was going to be people, you would it would benefit everyone if you were to have the ability to record and put yourself forward like that, because it's one thing it's one thing for me to do it. It's another
Mm.
thing for you to look at, right? Because subconsciously, and I mean, it's to no, and it's by no means am I elevating myself, and it's by no means a knock on anybody else, but um, subconsciously, the the term boot camp, right? It implies that there's an instructor and there are students, and that there's one person who's going to be teaching. And so I'm doing a if I'm doing a planning session and I'm recording it, and and I post something, there's almost 100% chance that nobody's going to question anything that I put on the chart. That nobody's going to
Right.
say, "Why did you do that? That doesn't seem right." It's going to be "Oh, okay, I get it now." But
Yeah.
you may not. You may not understand why it's there. Where if you guys are all learning together and there's like three or four of you posting planning sessions and posting recordings of you actually mapping things out, um, you're more apt to say, "Mike, can you check that and make sure that's right?" Or "Why did you put that there? I was reviewing the training, and I think this might be a better level." And then it's more collaborative learning, and it gets you guys to the point where you're able to plan for yourselves quicker. And so I don't know the best route forward, because no matter how much I've prodded, I've gotten very little in terms of recordings being posted. So uh, it's a challenge, because I don't want to post something that implies, at least at this point, right, where you guys are still learning and still trying to implement a bunch of different things. I don't want to post something that you guys look at and say, "Oh, that's definitive," or "Oh, that's what I need to be doing," or "That's, I need to be looking for this type of level all the time." Where instead, I want it to be, I mean, I want to see you guys doing that planning so that I can correct you, and so that I can offer advice. Well, not correct, because it's your opinion. It's not a binary thing. but I can offer advice as to how to adjust that bilaterally. So if you feel that the bilateral planning is or the bidirectional planning is what benefits you, and seeing me do it is what benefits you, um, do it yourself, watch
Hmm.
it back, and then if you're comfortable with it, post it, and let me do a response. Let me watch it and get a sense for what you're looking for, and then let me respond. Let me like post your chart with it. Let me load up your chart, and then let me make adjustments to what you're doing, and then I can talk to, um, then I can at least target my response so I don't ramble and start to
Okay.
talk about things we haven't discussed yet, and instead just focus on what it is you were trying to accomplish and build off of it, so that it's still your ideas and so that you're still planning, but I'm at least offering some friendly advice along the way, instead of just posting the end all be all chart, the almighty chart that everybody should be and needs to be following. Because uh, I don't like to put that on myself. I'm not. I mean, I could still learn things from somebody who's been trading 1 year. I don't ever claim to be better than anybody. So it's
So
my
wait,
charts
hold
are
on.
not end all be all.
What
You
I
say you
find
can
my
learn?
go ahead, Mac.
No, no, Laura, please go.
What I was saying is I get what you're saying. I like your charts, and when you do the breakdowns and everything. But I find myself, if I don't do it myself, I won't learn it.
Yep.
I probably mark my charts up and erase them 3 times a day and redo them,
Mm, yep.
because it drives me crazy if I don't think I have something where it should be. So I'll just erase it all and start all over.
Yep.
But yeah, I have to do it to learn it. If I watch what you're doing, yeah, I'll catch things here and there, but I try to do it myself and implement what you did to really it seems to help me better.
Yeah, and that's honestly like, and while you were talking about that, it just came into my head. So Mac, I remember the last time that we did live planning. We were on the webinar, and at the end of it, I kind of took a breath and I was like, "Whew, all right," and I'm done. And you piped in, you were like, "Wow, that was great." But then you and a couple other people, the next things out of your mouth were, "Man, I'm going to need to watch that a couple of times to keep up and
Yeah.
follow along." That's not what I want. If you guys are spending, if you guys are spending 2.5 hours watching one webinar, trying to keep up and replay it back, and it's moving too quickly, like that's part of the downfall of it. That's part of the issue where um, you're spending time
No,
that you could be doing that yourself, watching what you perceive as
not in my,
the best scenario, like the best way to do it.
but not in my opinion though, because I mean, me as a basketball player, I would watch Michael Jordan's footwork hours on end. Like, why did he do that? Okay, that's why he's doing that. Okay, I'm watching you like, all right, I don't understand that, but like, let me go back and watch it and see where he came. Like, oh, like now I get it. When you did that last week or the last webinar, I'm like, okay, he's on a different level. Let me go back and watch. I probably watched that thing like 4 or 5 times, and I'm like, okay, like I see where he's getting to, and when he does take it there, I'll have a better idea what he did there. It's just I like learning it like beforehand or however I can get it. I even go back and watch your videos from like 2 years ago, like
Yeah,
on
I do.
YouTube,
I hear
or right. I'm
you. Yeah, I
telling
do
you,
the same thing.
it's incredible. Like, and that's why, and this is no knock to anybody here. I'm like, please take advantage of everything that he's putting out, because I've been in several groups, and I haven't got anything like what you taught. So that's why I'm like, please give me more. I'm hungry for it. I was in the freaking shower, like get that webinar. I wanted it that bad.
Well, I feel like you were in the shower last time too,
Yeah, he was in the shower. Yeah.
because I remember hearing drips and I remember commenting on it. So it makes me a little weary of where you're bringing this. But No, I can appreciate that, and I get it. And it's finding a better balance of doing some live planning, and once really the sticking point is fibs. Once we get through fibs, and once we get through um, and once we get through a certain comfort level with Fibonacci, then I won't feel like I have to restrain when I'm getting through doing those live plannings, and I can just do it, and it'll be in front of you, and you will have at least have some content to reference back instead of being a little lost maybe. Um,
Hmm.
but yeah, I hear what you're saying. Let me and given that the overall participation did not pan out like I originally had hoped it would for the boot camp as a whole, um, with those recorded videos from other members.
Hmm.
Let me take some time to think about the best course of action, and because I see the value, and I see what you guys are saying, and I certainly appreciate that. Um, so it's something that I'll do try and do better to implement more often. I need to figure out the best way to do it without getting ahead of myself. And again, it by the end of like next week, it won't be a problem because I'll just be able to talk, and I won't have to hold anything back. But at least for the next like week and a half or
Love it.
so, let me think about the best way to approach that.
Sure. Absolutely. Absolutely. Looking forward to it. Looking forward to it.
And one more question. I hate to like
No, this is
hog the
this is
whole
what it's
thing with
for.
you.
This is I mean, I've had
Oh,
more
go ahead,
content
Mac.
with you
Yeah,
too.
shoot.
That's awesome.
Appreciate it. Um, we're still gonna cover like how to use all these different platforms, correct?
Yes. Once
Okay, cool.
it's tough to try and learn a platform and a broker and learn the best way to do it and learn to chart along with it at the same time.
Hmm.
And I mean, as like Lars trading spot forex, right? I I don't think it's new to him. I think it's
No.
something that he's been doing for a while. So he's taking what he knows or what he's learning through the course and applying it to something he knows is tried and true and what he's done in the past. And I think there are a lot of people in here that already know exact like the platform they're going to be using. Um, I know Ryan is on futures. He's on Tradeovate, and I think he plans to stick there. Um, I know a couple of folks are on Nadex and they just plan to stay with Nadex and they don't plan to move out. So I want to get it to a point where you're comfortable with the charts first, and then if you're, I mean, you don't have to take a trade prior to, you don't have to take a trade on any particular brokerage while you're learning how to do analysis and at least plan. Planning is the most important part, and then the implementation and learning different brokerages uh, will come and be easier. But yes, that's something
Okay.
we'll still cover. Don't worry about it.
Yeah,
Okay, good. Go ahead, Laura.
I've traded all the platforms. I've traded the futures on NinjaTrader and Nadex, and I seem to like spot forex the best. Not the best. I mean, I love trading futures, but I don't think I'm there yet. I mean,
Mm.
you need more money to trade futures, and I'm definitely not there yet. I mean, I can spot forex. You don't need a ton of money to get into. Um, and Nadex, I started off of Nadex. I like Nadex, but it just
It's tough.
the time thing it just kind of screwed me up.
And I
The
want.
hour trades and stuff like that. That I don't know. I
I'm
like
glad
that
you
more
mentioned.
time.
I'm glad you mentioned the time and everything, like with the theta and the gamma, like all the different Greeks and everything like that. Because I know you mentioned options, and like I remember you were like, well, there's not too many people that seem like they're I'm interested. I want to know your knowledge on traditional options. Does that affect like binary options. Is that like a huge part of it that most people don't know about?
Quite the opposite. I trade. I mean, I trade. I ch- it's very similar to binary options in just like the higher level the higher level overview, right? So if we take let's take Equifax for instance. I trade it all the same way. I trade everything the same way. For Equifax in particular, when we had this huge dive down here, I took I took three positions. I took an out of the money position that was, what's this, 110. I took an out of the money position at 108. So I took an out of the money position right here, and I'm going to use different colors to correlate. An out of the money position there, and that was for a July expiry. I took a barely in the money position at 90 for, let's do yellow for that. For a, it was a, oh, what was the expiration? I think it was a November expiration. So right there. And I took a straight stock position at, I think my fill price was 91. So I took a straight stock position at 91, and I took that off right at the 61.8. So I traded all the exact same way. I don't let the the Greeks really affect my decision. Because if you trade it right, like I mean, if you trade it right and if you approach it right and you're not trying to cheat the system by doing like an out of the money, a weekly out of the money option, like that's just a pure gamble. I mean, that's how honestly that's how a lot of people get in trouble is they don't understand the system and uh, they're trying to capitalize on the volatility in the Greeks rather than just trade the chart and ignore it. Uh, So everything we're learning is applicable to options. And when we get into different brokerages, we can absolutely talk about trading traditional options on Thinkorswim. Yeah, I took a Chipotle short the other day. Let's see, it was uh, this is a weekly chart. Um, I probably have it kicking around somewhere. I don't remember. I'll have to dig that up. I have the notes somewhere for it. I think it was took the short here for some reason, but I'll have to pull that up for a later time. But yeah, I mean you can trade options. Whoa, you can trade options the exact same way. The Greeks are something that it's valuable to know about and to learn about. But I mean I still just trade the chart. I don't. I trade it all the exact same way.
I figured once you get to know and work the charts and do your analysis correctly, you can pretty much trade anything, right? I mean, once you actually get that all down pat, I mean, you can go into different. I mean, like Nadex, of course, and futures. I mean, you can use the same analysis you use on Spot FX. I mean, see, I don't know anything about options at all, but I'm trying to learn one thing at a time because if I try to do too many things at once, it would drive me crazy.
Heck, I taught so I don't know how many of you guys were in BTG a long time ago, but there was a guy in there named Jace, and I did a lot of one-on-one work with him because he had a different vision. He wanted to leave BTG, and he didn't want to trade Forex. He didn't want to trade Nadex. He didn't want to trade any of that. He wanted to trade cattle ranching. And
Wow.
so I taught him how to do this and how to do like technical analysis on cattle counts. And he ended up opening an investment business for cattle farmers down in like Kansas or wherever it is he lives. Did the same thing with one of my good friends who was a he's a or was a front end developer for a web marketing company, and he wanted to learn how to do technical analysis because his father's business was trading semiconductors. So he took that and he's doing trading semiconductors now.
Wow.
Incredible. That, wow.
That's pretty awesome.
Like anything. That's crazy.
Yep. Yeah, it's I did a markup for someone else the other day on not Siemens, Silver. They got some bad advice and they were in a really bad trade and they were wondering where the market was going to go. This is just pure silver futures. So this is very similar to gold, but a lot less volatile. And you can see it works the exact same way. I had a good day today.
No doubt.
Yeah, wow. But yeah, it all works the same. You can literally trade everything. I mean, you could trade. I mean, I don't touch crypto, but I mean, same thing.
No, I heard about that. Whew.
How long does it take you to like mark up all those charts?
Um, I had somebody time me. It was when I ran my first boot camp. I had somebody time me, and I think it's either 50 seconds or 2 minutes.
Oh Jesus. Yeah. That's
I
what you
can't.
get when you do it all the time. That's great.
That's a fun challenge. I'm in a
Absolutely.
I'm in a good mood. Let's see what do we want to mark up? Let's do a clean chart. What do we want to mark up?
Boy, yeah.
Go ahead, Mac. Pick one.
Let me see something that move. Euro JPY, Euro Yen.
I think I may have actually done one. Yeah.
Yeah, you got your JPY already. Yeah, you got that one.
Oh, what you got, La?
How about GBP, JPY?
There we go.
Okay, let's clear that. That was a fun one. I traded. I was long from. This was my strike 145.47. And I took it up to here.
That's a nice one.
That was a fun one. But let's just do the 4 hour just so I'm not cheating because that was the daily. So let's change it. We'll just do the 4 hour. Right. And
when you're ready, I'll hit the stopwatch.
oh, okay. Here, let me. I got a head start here. Hold on, let me clear it. All right, go ahead.
Go.
Let's see. I don't like that for. Thinkorswim doesn't want me to succeed. trying to incorporate some past stuff here too, so that we
Sure.
not
Absolutely.
just. We already filled that negative 61.8. There's the 50. Okay. One more. There's really not much else in the, unless I were to drop down.
Minute 40.
Wow.
It took me an hour to do that.
That's a little
That's
messy
crazy.
too, because I was going for speed, but
Still though, that's awesome. But
Oh,
I do that
yeah.
probably 3-4 times a day on each chart. 'Cause I just try to get, it still takes me forever.
Likewise.
I don't. That's not what I'm not like. I mean, I'm not that. It's probably. I spend about 5 minutes on each chart, I would say, because I'm not
Sure.
racing through it like that.
All right, you don't want to rush. Absolutely.
I mean, and there are times too when I was doing my Equifax analysis before I entered that position, because when we got news of the breach, I think I spent a good solid 4 hours on Equifax trying to figure out where the best entries would be. So it really varies. It's not a binary thing, but that was fun. I always like a good race.
Absolutely.
Oh, man. I need to get to that level, man. Unbelievable.
Every day, man. A little bit every day. Get closer every day, buddy.
That's
Well,
right.
we kind of drifted, which is okay. I'm happy with the questions. That was fun. That was good conversation, and that's really what I envision for these webinars. After the questions that we had, I don't think what I have recorded is a good idea.
Okay.
I'm gonna re-record. I'm gonna try and do it tonight. I'll try and re-record and get this posted for tomorrow. If not, then I'll just have two recordings or a much longer recording on Friday. But I definitely don't think that what I currently have is. I need to go in a different direction. So I'm gonna re-record. Do you guys have any more questions before we cut it?
No.
No.
That was good. That was a good one, Mike. Thank you.
Thank you, Mike.
Good.
Absolutely.
All right. Well then, I'm gonna go try and get something recorded. I just gotta write out my plan for what it is I want to talk about now, so that I make sure I stay on task. But I'll try and get that recorded tonight, and then get it up tonight. If not, then I'll have a much longer video on Friday, probably about an hour and a half. That'll cover extensions and completions, and just riding that trend. So keep an eye out for that. If you have any questions along the way, or if you have the time to do any recordings and do some of your own planning like we talked about, post it. I'm happy to take a look and address that with some videos. But yeah, that's it. That's it for tonight.
That was good. Thanks, Mike.
Appreciate it, Mike.
No problem.
Lord,
Easy,
thanks for
man.
the question too, man.
Yeah, you too, buddy.
Yup, you too.
Have a good one.
Yup.